Good evening. This is the Elliott wave update for the NASDAQ 100 for Wednesday, May 25th, 2022. The markets continue to churn through some moves. Actually, as a day trader, the moves were not bad. And again, they were very lucrative within that first half hour to an hour of trading this morning. And so no changes here on the daily chart. On this daily chart, I'm still leaving this right now, and that would be the 11,491 low as the completion point for minor wave 3, which leaves us in the position that the market is trading or tracing out a minor fourth wave correction, a counter trend move. Minimally, the expectation would be for a wave 4 to get up to 12,364, 12,075 up in there, 370. Whoa, excuse me, 12,375, putting a little bit of a zone in there. And also to get up closer to 12,900 to complete. That's what I'd be looking for in a minor. And to surely get up at least to 12,600, which is what Elliott told us about fourth waves. When you're looking, it usually will come into the price territory of the fourth wave of one lesser degree. And that'd be right here. Minute is 1 degree less than minor. So thus far, we just again broke above 12,000 today. And we now need to get above 12,075 and we actually got a lot of resistance after that to complete what we're terming as this fourth wave. So I'm going to drop this down to the hourly chart so we can take a look at what's going on inside this fourth wave. So here's the bottom of the third at 11,491. So if I was to count this as wave A, I can count it as 3, because there you have 1, 2, 3, 4, 5, A, B, C, and then a very ugly but clean fifth wave. If we were to count it, excuse me, a 5-wave structure. So this could be A, B, C. And we never confirmed it to the downside, because if this was, as I said, going to be the minor fourth wave, the completion point, come in that week, then the sell pressure was way stronger than I would anticipate. The market did come down, but it suddenly stopped and they bought it back up. And so we're doing a series of 3s. And let me just kind of go over where we are. Now, before I go there, the fourth wave can come in 2 forms. One is going to be flat, which is where the A and the B and the C are roughly all coming in highs and lows meet up. Or it can be a zigzag. Well, the zigzag is out basically because of what's happening here. So that leaves the flat, but included within the flat are triangles. A triangle in the fourth wave, in the position of the fourth wave, is very common. The market is in a pause and really has not gotten enough information or momentum to go in either direction. So we tend to churn and form a wedge. So here we have ABC for A, AB, and plus you get an A wave, B wave, C wave, D wave, and the E wave. So you get, it's a 5-wave sequence, but they're all 3s and it wedges. Interesting concept, but that's the triangle. So we have wave A, wave B, wave C. Now, this kind of, I was like, yes, because remember yesterday I was like, okay, maybe we get a 1. No, and actually that wasn't happening. That didn't happen yet when I made it. But I was thinking that we need to follow through a little pullback, but I really wanted it to continue higher. It dropped down further than I would like to have seen it. Great trading, but in terms of the count and tell me market where we're going, I was feeling that we were starting on our C wave up and had laid out what the market needs to do. It needs to kick itself into gear and it needs to go and not look back. So that's what I was looking for. We would get that, but then the buying, like, oh, okay, all right, I can be with you. Then they sold it again. But so it continues to, drop into this counter trend type move, it continues to make me feel that the sellers are still there, and they do step in when I guess the only word that comes to my mind is prompted. So in other words, a bad earnings or sellers show up in one stock or another stock. Here we got NVIDIA's earnings. NVIDIA closed at 169.75. It's now trading 156.80. So it is down nearly $13. And so that brought the NASDAQ right down off of that high. And now we're waiting for the start of drawbacks. So I believe it'll probably continue lower. But here we have a count. If it's a triangle, A, B, C, we'll do a 3-wave D wave, which could come all the way down to here. Maybe a little lower, but it doesn't need to. It just needs to be 3 waves. And then turn and rally in an E wave. Now that E wave does hold the potential. And in this case, I would be very glad to see it. And that would be that it spikes above 12,040, above 12,075, above 12,096, possibly to that level to 12,100. And then turns and sinks in a 5th wave. And that 5th wave would be expected to break below 11,491. We know we have support underneath that at 87.83. We know if they start breaking that, we should have support at 11,400. And we're going to have to go to the big numbers because it suddenly gaps, the fib support gaps below once these levels are broken. So, but I would anticipate that to happen to put in the minor fifth wave. This is going to be the count. And once that minor 5th wave is in, then we could put the label of intermediate 3. But I'll tell you, I'm looking for intermediate 3 to complete below 10,000. So it would be a very powerful 5th wave. Right now, 3 is definitively the longest. But I think we need 1,000 points from here. I think that's very possible. That's just 10,008, and I'm looking for sub 10,000. So 1,800, I think that's also very, very possible. Now, exactly how long it takes, that I don't know. But could we drop? Yes. Even if we get up, I believe we can drop. If we don't go sub 10,000 now, we will do a strong intermediate degree 4th wave, and then drop in an intermediate 5th wave. And that one for sure will take us below 10,000 and likely down closer to that other target, which is the 2020 lows. So we've already reached down and been touching and playing around the weekly 200 several times. So this is an important thing because that's where it started. But the market came down, so it made it turn it flat. And if we do what I think it's doing, it arcs and drops. Its orbit is being affected, and it just keep turning. So it's going to take time because you can see it's long and it's big. It's a big boat. Okay, so what can we look forward to tomorrow? More frustrating times. I will start by saying that. And why? Because triangles are like everything else. The moves are sudden, they're quick. Like if you're zipping down and all of a sudden they zip up and they go further than you would think. You're like, what are you guys doing? And then suddenly here come the sellers, boom. So that's what I would expect. We're just going to get a lot of that, but it should be very tradable. So my advice as well is to stay on your toes and to keep focused, have the correct mindset. Your mindset is very short term. This is an hourly chart. We're talking about going down and trying to trade this off of a 5-minute chart, which right now This includes all of the today on a 5-minute chart. This was after, into the close. So there's plenty of moves. These were very tradable, very nice moves. So it is there. And when you go out to the hourly, you don't see that as clearly. You just see that. And that was broken up into several different layers, but still a nice bar to trade. Okay, going down the D wave. Often they say that you would get like 0.382, 0.618 of this, and for the D wave, because remember what we got to do is we're going to start to draw. You can put your trend lines in by connecting here to here, and it'll likely be broken like this one was. So you can almost put it in a little bit more. And this you could drive to there, possibly to here, these two. So you're thinking that the D wave should not be that deep, but it can. It can give you that little bit of a head fake. What it can't do is come below there. That would signal the end of whatever this is going to be and the return of the downtrend. So anytime it's going to break, I mean, it can break these, but if it breaks that, then this is a completed move and we're into the next move. Okay. So breaking down, we can think we get a D wave, and then we're going to get an E wave rally, and it's going to look very similar to this, or the inversion of this. So be prepared. And that one on the way up, I would expect to break the upper boundaries of the triangle pattern, peak and die. All right, I'm going to leave it there. Continue to follow with the moving averages. They are your friend. Use them the same settings, the same moving averages on all the periods, all the way down to your 1 minute or your 30-second chart. The same one, so no matter where you are. And it's the same concept when they break, when they're exceeded or when the market breaks down. So I'm going to leave it right there. Our next update will be Thursday, May the 26th.